Chipotle, everyone knows it. It's fresh, it's fast, and it's about to get a whole lot more interesting for investors. They just announced a stock split, a chance to grab a piece of this burrito giant at a more affordable price, a potentially tasty addition to your portfolio. This isn't just any stock split, this is a Chipotle stock split. It's not too late to join the fiesta. This stock split could be your chance to grab a piece of the action. Let's rewind for a second. It wasn't always the behemoth it is today. Started back in '93 by a chef with a dream, Chipotle focused on one thing: fresh, high-quality ingredients. No freezers, no microwaves, just real food, made to order right in front of you. This commitment to quality resonated with customers. People loved the food, they loved the experience, and Chipotle exploded in popularity. Fast forward to today, and they're a household name, a leader in the fast casual revolution. But it's not just about burritos and guacamole. Chipotle's been killing it financially too. Revenue is up, profits are strong, and they're opening new restaurants at a blistering pace. This is a company firing on all cylinders. And now, with this stock split, they're making it easier than ever for investors to get a piece of the pie. I'm talking about a lower barrier to entry, a chance for more people to participate in Chipotle's continued success. Okay, time for a quick lesson on stock splits. Don't worry, it's not as complicated as Chipotle's menu. Essentially, a stock split is like taking a pizza and slicing it into more pieces. You're not changing the size of the pizza, just making the individual slices smaller and more affordable. So, when Chipotle splits its stock, the price per share goes down. This makes it more accessible to everyday investors who might have been priced out before. Think of it as a way to attract new shareholders, increase liquidity, and create a buzz around the stock. Now here's the important part. A stock split doesn't change the underlying value of the company. It's like dividing $1 into 4 quarters. You still have $1. But, and this is key, stock splits often create excitement in the market. Investors see the lower price as a buying opportunity, and this can drive up demand, potentially boosting the stock price over time. Let's talk about why I'm so high on Chipotle. First off, their financials are rock solid. We're talking consistent revenue growth, impressive comparable store sales, and healthy profit margins. These are all signs of a company that's not just surviving, but thriving. But it's not just about the numbers. Chipotle has a strong brand, a loyal customer base, and a commitment to quality that sets them apart. They're also in the sweet spot of the fast casual dining industry, which continues to grow at a rapid pace. And let's not forget about their digital presence. Chipotle's online ordering and delivery platforms are top-notch, allowing them to reach even more customers and stay ahead of the curve in a rapidly evolving industry. This is a company that's built for the long haul, and I believe this stock split is just the beginning of another exciting chapter in their growth story. One of the things I love about Chipotle is their willingness to innovate. They're not afraid to experiment with new menu items, test out different concepts, and keep things fresh for their customers. Take their recent foray into plant-based protein with sofritas and now plant-based chorizo. They recognized the growing demand for vegetarian and vegan options and responded with delicious, innovative products that have become customer favorites. They're also constantly improving their digital experience, making it easier than ever to order ahead, customize your meal, and even earn rewards through their loyalty program. This focus on convenience and personalization is key to attracting and retaining customers in today's fast-paced world. Chipotle understands that staying ahead of the curve means constantly evolving and adapting to changing consumer preferences. And that's a recipe for long-term success in my book. Now, let me tell you how I'm playing this. I see this stock split as a fantastic opportunity to add to my position in Chipotle. I've been a fan of the company for a long time, and this just makes it even more attractive. My plan is to use a dollar cost averaging approach. That means I'll be buying shares gradually over time, regardless of the price fluctuations. This helps to mitigate risk and ensures I'm getting a good average price over the long term. Remember, investing is a marathon, not a sprint. I'm in this for the long haul, and I believe Chipotle has the potential to deliver strong returns for years to come. Now, before you go rushing out to buy a burrito bowl and a share of Chipotle, let me be clear, I am not a financial advisor, and this is not financial advice. This is just my personal opinion based on my own research and analysis. Investing always involves risk, and it's crucial that you do your own due diligence, understand your risk tolerance, and make informed decisions that align with your financial goals. Don't just take my word for it. Talk to a financial professional, do your homework, and invest responsibly. But hey, while you're at it, why not grab a burrito? You can't go wrong with a little Chipotle in your life, whether it's on your plate or in your portfolio. So, what do you think? Are you bullish on the stock? Let me know in the comments below. Remember to like the video and subscribe for more videos like this as well.